Hey, it's Clay Trader, and this will be a video chart on ticker symbol AKER. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I'll let you this time frame. I think that's a good job of telling the quote-unquote story of the price. And in this situation, makes just summarizing the price action very straightforward. So if you say, Clay, look, summarize this for me quickly, I would say pump and dump on thin ice. Now, I'm not saying pump and dump in the sense that this company is being run out of a bunker in North Korea. I'm just making that statement based solely on how the price acted today. And my definition of a pump and dump is that a price makes a really nice move, and then within a relatively short amount of time, the price goes back to where it started, or in some cases lower. So let's first just map out kind of where it started in my mind. And where it started was when it broke out of that very stubborn channel, which was right here at the 84-cent mark. You go back through the history of the chart, and you can see the bulls just had a very difficult time of ever getting up above this channel right there. I mean, it just kept getting rejected and rejected, but it did finally break through right there. So that is the starting point. So let's apply the definition. Price makes a really nice move. Well, it started right here, and then it went up as high as there. I'm assuming we can all agree, yeah, that was a very nice movement in price. Second part, within a relatively short amount of time. Well, considering this all happened in the same day, I'm hoping we can agree that this happened within a relatively short amount of time. The price goes back to where it started, or in some cases lower. And now that is where the thin ice comes into play. And our thin ice point is right here at 84 cents, 85 cents, right around that area. Why is that the case? Well, to be fair to the bulls, maybe the price comes down here, walks around in this thin ice, it holds, and then the price starts to work its way back upwards. If that were to happen, well then, hey, you have a set of lows right here. You have this set of lows down there. If you picture each one of these as stair steps, well, now you have overall stair steps progressing in the upwards direction. And that's what it's all about. You want to see progress forward. However, if the price comes down here and the thin ice does not hold, and then the price breaks through and worse yet separates to the downside, what would you have at that point in time? You would literally have the price right back inside of this range that it just broke out from. And going back to where the price was, that's not a sign of true power at all, and that would kind of seal the deal in terms of the pump and dump. So as it stands right now, yeah, the bears have a lot of momentum, but to be fair to the bulls, they can still technically build a higher stair step, so we'll see if they can get that done or not. But 84 cents, a very important level of support. We'll see what happens. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.